Alright guys, so I wanted to give you a quick video about how to do the financial statement impact on your Chapter 2 homework in Connect. There are a couple of questions about it, so I wanted to do a short video so you guys can see what you need to do. Alright, so if we are looking here at financial statement impact, the first boxes that we need to complete is where can you find each of your answers. So meaning what financial statement would you go to? So if you're looking for net income, of course you would go to your income statement. If you're looking for total assets, you would go to your balance sheet, because our balance sheet is going to be total assets, total liabilities, and total equity. So again, our balance sheet for assets, our balance sheet for liabilities, our balance sheet for total equity. Alright. And again, remember that assets must equal liabilities plus equity. So as we're doing this, you need to make sure that your numbers are evening out on both sides. Your total assets have to equal your total liabilities and equity. Alright, so for the first one, it says People First received a cash contribution from Paul, which is an owner. Okay, so that means that assets went up by $58,000 because cash is an asset, and also equity increased because it's an owner contribution. Owner investments, owner capital, they're all part of equity. Okay, so that's why we put the $58,000 here and here. Alright, December 2nd says that $3,900 in cash was paid for supplies. So again, we need to think about what two kinds of accounts are we talking about with this transaction. Cash is an asset, but also supplies is an asset. So we are receiving supplies in exchange for cash. So our cash is going, assets are going up, but they're also going down. So the net impact is zero. So we still show that we have total assets of $58,000, total equity of $58,000. All right, December 3rd, okay, the company paid $42,000 cash for equipment. Again, we're talking about two assets here. Cash is an asset, equipment is an asset. So the cash asset is going down by $42,000. Equipment is going up by $42,000. So the net change is zero. So we still have $58,000 of total assets. All right. So December the 4th, this one's going to be a little bit different. Okay. So the company purchased $4,250 of supplies on credit from a supplier. Supplies on credit. So we have to think about what kind of accounts are we talking about here. Alright, supplies, that's an asset. On credit, if we purchase something on credit, that means we have a liability because we have accounts payable. So again, our supplies, that's an asset, and on credit means that we have accounts payable, which is a liability. So now our assets should be and liabilities, we have new liabilities. So now our balance for total liabilities is not still zero, it is $92.50, and equity is not changed. Okay, so we're just adding the amounts for each business transaction. We're going to add the impact to whatever financial statement it goes to. Alright, and so again, as a check, we need to make sure that our total assets equal our total liabilities and equity. So $67,250, if my math is correct, should equal $92.50 plus $58,000. Hopefully that helps.